Welcome to my channel. This is Spherical FX Academy. In this particular video, I'll be doing my normal weekend analysis ahead of market opening. In this week we are already in. I do this every weekend. I used to analyze the pairs. I used to prepare myself ahead of the time, because whenever you fail to plan, you are actually planning to fail. It's an adage and also a saying that has a deep meaning. So if you have not been following my channel, please kindly subscribe to my channel, turn on your notification button so that you will not be missing my weekend analysis, because I have a lot of things to teach you in this particular video. There's a lot of things you will learn in this video. You will actually learn how I personally do my top-down analysis, and you will also learn how to correlate DXY, which is the dollar index, with other pairs. You will also learn how you utilize the information the DXY is giving you towards take a decision in other pairs. So not wasting time, let's go to analysis. Let's do a small top-down analysis in this DXY. In this DXY, you can see that the market broke a structure here. This point is where the market broke a structure. Then the market come down to this point, which is also a point of interest. Another block, you can see it. The market is reacting from the other block. Then where is the market heading to? Because things you check in the market is where the market is reacting from and where it is heading to. This market is heading into this fair value gap. It will first of all touch this fair value gap. Or when this market touch this fair value gap, then it might also probably go to this supply zone. This is monthly time frame. So we have drafted out our by directional bias, that this market is in retracement phase. You can see it. The market is in retracement phase. So either retest into here, come down, move down, or to stop here and move up to here, to come down, to buy up. Now, is it that we see something like this in this market? We are not predicting the market, because market is reactive, not predictive. You don't predict the market. What you do, you react according to the story the market is telling you. So now you have seen that we have generated our bias, that this market is trying to come to this fair value gap. So we'll be expecting that this dollar will keep on be bullish, while other pairs that link to it will be bearish. Something like Euro USD, JPP USD, AUD USD, NZD USD, they will now be going down. Now let's go into 1 week. You will see into 1 week that there is a clear a clear sweep. You will see there is a break of structure here. There's a break of structure here. It is obvious. And there is a point that caused that break of structure. We don't expect market to go above it. If market to go above it, is automatically a change of character, and you cannot actually see that the market changed character. So we label there a change of character. Then we will also see that this market is reacting away from it. It is reacting here. The market tap into this mid pivoted order block, and it is reacting on it. Where is the direction? It is actually trying to break this high. So this high is our target. We are looking forward that this market will actually break in this week we are entering. So now we will label there a buy side liquidity, BSL, which stand for buy side liquidity. Are you getting how I'm doing my top down analysis now? we are in the 1 week. Then there's another information I want us to see, which is information of candlestick. Did you know that this candlestick you see here, this candlestick you are seeing here now, is indecision candlestick, is an accumulation. This thing now is an accumulation. So probably we will be looking that market might actually what? And there is a little fair value gap here. There's a fair value gap within this zone because this is where this market, sorry, let me mark it well. You will see that there is a fair value gap. Let me zoom it clearly so that you will see it properly. You will see that there is what? There is what? A fair value gap. This zone is not touching here. So we'll be expecting the market to bounce into here and move up because this is what? Accumulation. So let's go to daily time frame and see the information the daily time frame is giving to us. Now, in daily time frame, we can see that this market is trying to what? Come down into this zone. Then another information the market is giving us here is that there is a sweep here. There is a proper sweep of liquidity here. There is a proper sweep of liquidity in this zone, and the market is reacted on this fair value gap. There's a fair value gap here. You can see it. There's a fair value gap within this zone, and the market has what? Reacted on that fair value gap. And you know that fair value gap is also what? Institutional point of what? Institutional traders point of interest. The institutional traders also buy from other block, demand zone, and what? Fair value gap. So you can see that the market reacted in this zone. So we are not expecting the market to what? Come down here. We're expecting the market to react again from this zone above, and there is what? Another block here. Let's narrow this analysis down to this 1 day order block. This is a 1 day order block. So we're expecting the market to react within the zone. Are you seeing how I'm doing my top-down analysis? If you don't learn anything in this video, learn how I do my top-down analysis here. Very, very perfect and very, very clean and well understandable. This will give you what? A clue into what the market is doing. Now, can you see that market has reacted in this fair value gap? So we are not expecting anything that will bring this market down to here. So the only place that remains for market to react is within this zone. And I told you that this is an accumulation. Once I see that candlestick uh, um, and 1 hour in 1 week time frame, I told you it is an accumulation, and you can see it clearly that this is not. This is what? This is an accumulation. I can see it is very, very obvious. Don't mind my line, that is, it is not straight. So now, this is an accumulation. When market is just not making any movements, it just stay within one zone. It is an accumulation. This is an accumulation. So now, we're expecting the market to buy from here to sweep the up. Now, if you come to 4 hour time frame, let's see what the 4 hour time frame is giving us, because we will use the information we see in 4 hour time frame to determine what we are going to do. Now, can you see that this 1 day, inside this 1 day order block, we have a pure what? Zone. You can see this zone. You can see this zone. It is what? A 4 hour what? Demand. It is a 4 hour demand, and this is still that accumulation. You can see it clearly. So now, what are we expecting? There's another information this 4 hour time frame is giving us. 4 hour time frame is telling us that this market sweep liquidity above here. You can see it. That is sweep liquidity above. Like it break structure. You can see a clear break of structure. This is a clear break of structure. And which point caused that break of structure? It is this point. It is this point. And we are not expecting market to close below this point. If market close below that point, it is automatically what? A change of character. But it's an internal what? Change of character that will make this market to reverse down here to move up. So we call it either I use internal change of character. This is the main internal change of character, or I use change in state of delivery. Let me use the word change in state of delivery as the word sound change in the state of delivery. The market has changed, delivering from uptrend is about to start delivering what? Towards downtrend. And we can see that there is what? A clear what? Surprise zone on this zone. You can see it clearly. We are going to only analyze this DXY. We are going to do top-down analysis only on DXY. Then we will use the information we got here to correlate it with what is happening in Euro USD, GBP USD, AUD USD, NZD USD, USD JPY, and USD CHF. And we are done in this video. So now you can see that the market is trying to what? Retest into this zone to sell. So what are we expecting? I'm actually expecting this market to move here, then react here and come down here. Remember, market is not predictive, it is reactive. Understand? It is reactive, it's not predictive. So I'm not going to place any sell from here. And they also know that this is dollar index. You can't trade dollar index. You can't trade it in any broker. But to use the information that is happening here to what? Correlate what is happening in the other side of the pairs. Then now, this is actually what I'm expecting that will happen next week if market opens. So now let's go straight to 1 hour. If you go to 1 hour, this thing now will be more clearer. If you see that, you can see there's a top order block here. There's another block in 1 hour. It's a very, very nice order block. You can see it. There's another block here. Let me mark it out clearly. So this is another block. We can also take it as a surprise zone, because any point that caused a break of structure is what? A surprise zone. And this point now is what that pulls this market down here by causing this what? Change in state of what? Delivering we labeled what? Here. So now whenever or when this market opens, we will see something, this market going up here towards hit this surprise zone and what? Sell. So if this market is moving up here, that means that dollar is getting what? Strength. What is happening to this trend line? Let me take it back to where it should be. It seems my network is down. Then wait, I'm coming. Let me just put this. Okay, my network has come back. Now, if this market is pushing up to here, what it means is that the dollar is getting what? Strength. The dollar is getting strength. If dollar is getting strength, Euro USD is meant to be what? Selling. Euro USD, JBP USD, AUD USD, and other pairs is meant to sell. So now, what are we looking forward to see in this particular dollar index? We're expecting to see sell to buy. We're expecting to see sell to buy. I will show you the one I analyzed last week. It played out perfectly well. The one I analyzed last week, it's played out very, very perfectly well. I will show you. Wait, I will show you. So I'm expecting the market to sell down to here, to buy from here, to now buy from here, to move above here. You could remember there is a place we have a buy side liquidity. Let me adjust this one first so that you see where we'll be targeting. See where we'll be targeting. It's very, very high. See where we'll be targeting here. This line is that buy side liquidity we marked in what? In 1 week time frame. This is it. So we'll be aiming this particular what? Point we marked in 1 week. So this is what I'm expecting to see in what? In DXY, in this what? Upcoming trading days. Now, let me show you the one I analyzed in last week in DXY. This is the one I analyzed last week. You will see it. It played out perfectly well. These things they are not rocket science. They play out perfectly well. Then you can see it. I label this that this market is in what retracement phase into this what demand zone to what continue what continuation phase. What happened? I saw this surprise zone and what I marked it out that the market will tap into it and sell. This is not an SI because we cannot trade DXY. You cannot trade DXY. You use DXY as what direction in whatever you are doing. So I expected that this DXY will move up then and sell. Then when I saw this, I knew that opposite of this will be happening in what in GBP USD and Euro USD. Let me show you the one I traded in Euro USD. This is it. This is it. You will see how perfectly it plays out. Can you see it? Can you just see it? You see it. It's still the same thing. You see, let me open both of them. This is in what retracement phase going down. When this one is going down, you expect this Euro USD to be what going up. So this one is retracing. It is going down. Now I use the information I got from that DXY to now see that if dollar is buying, I'm expecting this to come down towards buy, and this is actually what happened because this one is on its own retracement phase into this point to what sell. Now now you can see it, the market was entered into this my strategy. This is my strategy XBI plus timing because I timed it perfectly well. This thing happened within what New York time. So now it entered into here and it is buying. I'm still holding this thread till here because I'm not going to close it until it touch here. Even though I might we might also see this market coming down into this zone to continue what buying up. So now what are we expecting? I will continue this analysis here. What I'm expecting is that this is what I'm expecting in this trend. Let me adjust all this. Let me adjust it to this zone, to this place. Let me adjust this one too. You can see market is what reactive, not predictive. You don't predict market, rather you react according to what the market is telling you. Any story the market is telling you is what you will believe. If market is telling you, see oh, I'm now buying, you don't need to start selling because if you do that, market will show you pepper. Market will teach you a very very what lesson, and you will learn the hard way. And the market does not care for your emotion. If you want cry, if you want invest the church money, invest your inheritance, market will take it and what do as if say that it didn't even take your money. So we're expecting to see another what buy on this zone because this place is actually another what clear what buy zone. So we will be expecting to see a buy from what this zone. I'm missing there's something I'm looking for. I'm looking for something here, but it was closed. Why is it closed? Why is all my tools hidden? Why is all my tool? Okay, I have bring it out. All this. Wait, sorry. Let me set my tools first because they are my power. Let me set them well. All my tools. Let me set them well because it's not everything here that is even applicable in the market. So I take the ones that are applicable. These ones I brought out here is what I normally use all the time. So now this is a demand zone. You can see it. This is a demand zone. Let me mark it out. This is a demand zone. Now this demand zone is where we're expecting to see another what buy. So is my another zone that align with my strategy, the XB strategy. Now we'll be expecting to see this market retrace inside this zone and buy from here. We're expecting to see a buy option from this zone. So now where are we going to target? Where are we going to target? We are going to target what? This what? Surprise zone. No, this surprise zone is enough. Inside here is enough. This is where we'll be. This is what we'll be what looking to see next week. Okay, the week we are already in. If market opens, we'll be expecting to see a buy here because of a reason. The reason is because of what the DXY is telling us. You will see the information DXY is giving us. Let me go to where I've been analyzing it before. This is what we have been analyzing here. We're analyzing it in TVS. Okay. Now, this is what we have here. This is our expectation. So if this market start moving up, DXY will be going down because this thing is like a weighing scale. If USD, this is two pairs. This is two pairs called USD JPY. Sorry, did I say USD JPY? Sorry, two pairs called Euro USD. Now, this thing now, when Euro, if sorry, let me put things first before I explain what I want to explain. We have these two pairs like this. They are balanced. These two pairs are now balanced, connected with a line. A line is connecting it, like if you know weighing balance, how weighing balance look like. If you know weighing balance, that is how these two pairs look like. So in weighing balance, let me assume that both of them was on a straight line before. Both of them were balanced. If this one started going down, if USD started going down, if USD started going down, you expect this one to be what? Going up. If this one started going up like this, you will be expecting this one to be what? Going down. That is exactly what is happening here. This one is what? Going up, which is what? USD is going up. Magic is not a magic. This one must actually what? This euro must actually what? Coming down. So once it's come down to here, if this DXY start what? Reach here and start what? Going down. That is when this one will now have the freedom to what? Go up. Are you just seeing it? If you didn't learn anything, just learn this thing I explained here. Because it is rare to see explanation that looks like this, very simple like this. So now we are not going to continue doing top-down analysis in other pairs. We will just be what? Marking it out because they must always look what? Similar. So that you will also observe that it is USD that is controlling what is happening in Euro USD, JPP USD, AUD USD, and SZD USD. So let's go to JPP USD. Now, if you see JPP USD, I think I also caught a trade there last week because I traded the JPP USD and the Euro USD on the analysis I made on my DXY last week. So I think it is here that I have that trade. Okay, maybe it's not here. Let me check. Let me check Pepstone and know if it is here that I analyzed it. Yes, exactly. So this is where I analyzed it. I knew that this market is in retracement phase because there is a surprise zone and there is a break of structure here, and the DXY is also what? In retracement phase, going down. So when DSY is going down as a retracement phase, JPB USD will be what? Going up as a retracement phase. So now this is the supply, this is the demand zone the market I caught last week. Now the market is almost about to hit this TP, but it does not hit the TP, so and it is coming down. So I'm expecting to see another what? Buy from here, or the market might just do anyhow, try to reach here before what? It sell. But before we take any sell from here, before we take any sell from this particular here, or even in that Euro USD, we must make sure that we confirmed that this market now, this DSY has actually reached here and it has reversed here, trying to what? Push up, because it is when this one will be pushing up that this one will be what? Selling down, pushing down, because they are like what? Weighing balance. When this particular, let me use this thing again here. You see this thing JPB USD. You can see it. This JPB USD written under here. When this one now is going up, you will be expecting this one to be what? Coming down. If this one is coming down, this one will be what? Going up. So that is how it works. So let's go to AUD USD. AUD USD. And this AUD USD, okay. Let me check on and know if I have any charts there. Now, okay. Now see. Okay, this is a. Oh, I didn't take this trade actually. I analyzed it, but I didn't take it because it was not aligning with the DXY at the moment. That's why I didn't take this trade. That's why, and it actually what? Hit loss. If say I took this trade, it's we actually what? Uh, left me with what? Lost. So now, what else? We are still expecting to see what? A retracement into this zone. This is actually, I'm giving you a signal that you will take next week. So we're expecting to take another buy up to what? This zone, which is about how many pips? Let me see. Wait, my network is not actually smiling. Let me adjust my stop loss. Okay, very, very nice. Less than 20 pips, because I always like to keep my stop loss less than 20 pips. Highest 20. My stop loss don't used to pass 20. So now this is what we have here. Close to 130, 130 something pips, which is close to, if you check it well, it is a 1:6 risk reward ratio. So we're expecting to what? See a buy, a retracement into this zone, but then we go to 15 minutes time frame to see a confirmation. I don't take trade without confirmation. You need to still go down to 15 minutes to see a structure that look like this, which is what? Inverse head and shoulder what? Pattern. Then you take the trade from this zone, then targeting the what? This supply zone here. Now, so this is what we have for what? AUD what? USD. Then, and you can notice that all these things are what? Aligning with what the DSY is what? Doing. What DSY is doing. Like I used to say, if DSY is moving up, all these pairs I'm talking about will be going down. When USD is going down, all these pairs I have mentioned will be what? Going up. So now, like we see in that DSY, we will see that this USD, which is the DXY, is actually what? Going up. So which is actually the reason why this one will come down. Then if that DSY leads to that supply zone that it is going, this particular supply zone, if you lead to this supply zone, by that time, this trade must have come down to this demand zone. Let me label it. Must have come down to this what? Demand zone. So now, when this market must have reached to is supply zone, when dollar must have reached to this supply zone and is about to supply and is about to sell, we will now be seeing that This one now will be what? Will be ready to what? Buy. Now, do you see how it works? Very, very simple and very, very basic. If you apply all these cautions, you will not be hitting SL anyhow. And your trading what skills will be what improved. Now, let's go to NZD USD. If you go to NZD USD, are you seeing how all these things are looking what alike? Now, have that supply zone, which is actually our target. In all these pairs I have mentioned, this is a supply zone, the same supply zone. Do you see how I used just only one top-down analysis I did? Only one top-down analysis I did on DXY to be what? Challenging what is going to be what? Happening what? Here. Because it is dollar that controls all these pairs. And now, you will notice that this is what? Is a major what? Liquidity sweep. This is a major liquidity sweep. I don't want to be going to this side to see what's happening here. I want to take the information that is happening here. So this is a major liquidity sweep. We label it with what? X. It's a major liquidity sweep. We label it what? With what? X. Now, then we have a change in state of delivery here, because it is this point that caused that what final break of structure. So here is what change in state of delivery, or you can call it change of character, or you can call it market structure shift, MSS. Market structure, some people label it market structure shift, some people used to call it change of character. You can also call it change in state of delivery. Why I call it change in state of delivery is because it is not a kind of a reversal to a trend that will last for long. It's just trying to change the state of delivery for just a meantime. After that meantime, everything goes back towards downtrend, which it used to be, or it has already been on. Then this is a level change in state of delivery. Now, the normal thing we knew, once this one is what pushing up, we'll be seeing this one pushing down. Once this one is what going down, this USD, once it start going down, this one will what be what buying now. See, so let's mark the demand zone. I will mark the demand zone from here because of some reasons to avoid mis trading, because there's a pattern, a candlestick pattern I saw there that made me to take it from there. You can see that it is only this black candlestick is standing. All these ones are just like accumulation inside it. So I will take the big candlestick as my POI. Now, it is actually what my kind of strategy is, that I call it demand zone, or I call it XB. It's actually my strategy. My SBE strategy is SMC based strategy. So then this is what a liquidity, because as the market is going down, it will be creating what more and what more liquidity. That's why I drew the line downward to show you that the market will now be what tapping on it, like market will be doing something like this, tapping on it, moving something like this, till what it peak momentum to what give me what a change in state of delivery in 15 minutes. Once it give me a change of state delivery in 15 minutes, then I will now position towards buy towards this what zone. Are you seeing how simple it is? But it took me years and consistent learning to be able to reach to this level. So you will also be at this level if you take it serious in your learning. Then I'm expecting to now buy with confirmation from here, because I love to what be protecting my what capital. There's nothing that I love than to what than protecting my capital. I love it so much. I protect my capital as if that my life depend on it, because it is that my capital that always give me the ticket to what show up here every day. So if I lose my capital, that means it is over for me. Otilo, I will never be able to cut. I will not have that what bargaining power to come up here again to trade or do anything. Now this is what 90 pips, which is about what? Close to what? 1 is to more than 1 is to 4 risk reward ratio is actually more than 1 is to 4 risk reward ratio. So it's just close to 1 is to 6 or thereabouts. But this is actually what I'm expecting to see a buy to this what I don't want to hold to up here because my market might still come up, but here is what a realistic zone, objective target, not subjective target. These objective targets. So now let's now go to USD JPY. Let's use USD JPY to what analyze another pair that's will be going up. Then now from here, I will now be taking a trade from here. So let's just see what USD JPY is doing. Then here, okay, this is analysis I have long time ago that the market will actually sell from this zone, and you can see that market is respecting that my supply. I can see that the market is respecting that my supply from here. So you can see my supply zone. The market is already there, and if you remember something, there's why I took this here is because I saw this break here breaker block that market might react from this breaker block, but I still extend my SL over here, but I didn't take any of this trade because market has never given me the confirmation what I needed. So now for us to correlate, let me delete these things because we are going to be taking out a new level. Now, the only thing we need to pay attention is that the market is already in our surprise zone. And what are we looking forward? We are looking forward that dollar will sell. Is it not true? It's true. We are looking forward that the dollar will sell. Now let's mark out this. This is our change in state of delivery. And you can see that what it has actually what break that zone. Let me mark it change in state of delivery. Let's go to 1 hour. So you will see it clearly. This is our change in state of delivery. Very, very obvious. You can see it because this is the point that caused what? The break of what? Structure. When you are analyzing markets like this and you will be correlating it with the propelling force, or let me say the force that drive this market is actually coming from the DXY. Is actually coming from DXY. So now this is a point we'll be targeting. We'll be targeting this point. This zone now is our surprise zone. We'll be looking towards to know if market will tap into it. If market tap into this zone, we will take the trade immediately with no what waste of what time. We will not waste time to take a sell from here because of what the DXY is telling us. Let me put everything in place so that we show you. Because if you could remember, DXY, or let me say USD, because that DXY represent what? USD what? Fundamental. So if USD fundamental is telling us that USD is about to what? Sell. Like we have here, you can see in this DXY, this is what we have. We have DXY to come up here once it tap here, that is going to what? Sell. So if this DXY continue coming up, that means this USD wait this USD JPY, because USD is now the one leading. It is not like the wife to this one, because this one now, this JPY is a wife to this what? USD now. So USD is like the husband. It is the one that is taking the lead, unlike what is happening in Euro USD. Because if it is Euro USD, you will notice that in Euro USD, like this, in Euro USD, that USD is the what? The nagging wife, the powerful wife, the alpha female. You will see that this in Euro USD, that the USD now is the wife, which is the wife that is controlling what? The man. The same thing applies to what? JPB USD. USD is always what? The wife that is what? Controlling all these pairs I'm mentioning. All these pairs I'm writing here. It is what? USD that is what? Controlling them as a wife. It have influence over the what? Their what? Husband. That is how all these things works. I want to bring it to the realistic life, like kind of life scenarios where women control their husband in a marriage and all those things. So now, but here USD is what? The what? The husband itself. So that's actually whatever that is happening in this DXY will actually be what? Be exactly the same thing that will be what? Happening here. If DXY is moving up, which is the USD moving up, this pair has no choice than to be what? Moving up. Forget about this thing that it is doing here. There's a tendency that this market is creating this to what? Induce people. Market might open, you will see a move up into here, then you will see a drop, a very very sharp dropping so into what? This zone. So now you could remember now this sell now is not going to target what? Interest zone, because it's not going to continue selling like this forever. It's not going to continue selling like this forever, but it might target this liquidity point, and because that this is the only where I knew that we have a valid POI. This is where we have valid POI. So I'm expecting that this market might come down to tap into this fair value gap. There's a fair value gap. Let me just mark it up from this fair value gap. You see that fair value gap? It has not been used. So if you want to take a long sell, this place will be our what? Target for the what? A buy, which is about 100 and the what? 30 something pips. But this will be our second TP. Our first TP, a realistic TP, is here, and then follows by this one. So this is what we what be expecting what in what USD what JPY. Then let's go to USD CHF, another what pair that what USD is the what husband. Now here you can see now that the same thing is happening. Do you see how this is my previous analysis here? I took this thread. I could remember this particular thread now. This particular thread, I cut it because I knew that this market need to still come down to this what price and mark the what XBE. And all these things you are seeing here, there are tendency that this market will actually what come to it. But the first one I'm expecting for the market to come is this one, and it is this USD JPY that has the exact chart with what DXY. Now let me mark out something important. This is what our what change in state of delivery, not our change in state of delivery. So you see all this thread is a signal, and I'm teaching you a lot in this video. I believe in this video you must learn new things you might never knew, or things that have been confusing you, because how I explain on my own, I explain it the way that you will what actually what understand it with what real life what scenario. So now here, this is the change in state of delivery. You can see it. Then let's mark out the surprise zone. The surprise zone is within this zone. So this is our surprise zone. Market is reactive, not predictive. That's why I know why I always use this word. Market is what? Reactive, not predictive. So that's why you also know that you need to have confirmation in whatever you are doing. You don't bet, you must have what? Confirmation. So now, so you see this place I labeled SBE. This is where we are looking forward to see a sell. A sell will actually come from here. I will tell you why. Or if you have been following this video, you must have known the reason and why. All these things are what more than higher what 100 pips. This one is actually what 100 and something what pips, and I don't risk more than what 20 pips. So I will bring down this here, which is what? 14 pips. 14 to 14. Is it not 1 is to 10? 14 pips against 114 pips. Is it not 1 is to 10 risk reward ratio? If I'm not mistaken. Okay, sorry, 140. 140 should be what? 1 is to 10 risk reward ratio. Okay, but this thing is more than 1 is to 5 risk reward ratio. Because if it is 20, it is what? 1 is to 5. So this is 1 is more than 1 is to 5. You will know where you will see 1 is to 5 risk reward ratio. Or you see someone that will be giving you a signal of 1 is to 5. I'm not giving you a signal of 1 is to 5 free of charge with what? Other knowledge. Now, let me show you that these two threads, you see here, do you see here DXY? Are you seeing what DXY is doing? You will see that both of them have very, very similar stuff. Anything that is happening here, knew that it is what it will be exactly what the same thing that will be what happening here, and you can see it. It is very, very clear. This surprise zone is still there. You see this surprise zone. Sorry, did I say surprise zone? Demand zone. See the same demand zone here. Do you see this surprise zone up here? See it here. See it here. So if this market move here, we will look for confirmation and what? Follow it down. What is happening here should be that the same thing that is what happening what in this what pair. So this is what we be looking forward to see. Now we might either see a buy from here, this is that point, or due to this liquidity here, we might see a buy from now from this what zone. So that's why we will not press a buy here, or we might see a buy from this actual this zone, from this zone. So now let's not waste our time. We just milk this sell. Once market open, we milk this sell, then we look for confirmation to buy from anywhere from this zone, then buy up. Then let me do a quick analysis on gold. Then we will call it, I will call off this video. Now on gold don't actually follow DXY that much. It is an independent meta on its own. It doesn't actually like to follow all this, but you can see that it is doing something of its own. It is doing something of its own. But know that this thing is what actually in what downtrend. Because let me go to 1 day and see what is actually happening there. So in 1 day, it has actually sold down into this zone. So that means it is reacting from this other block. There's another block here. So it is reacting from what? This particular what? Other block. Now, then let's go straight to, no, sorry, I saw something I need to mark out. I didn't mark out. Now, let me zoom this thing so that we see clearly. So here we have this. Do you see this other block? Market will react to it. When the market reaches there, it will react to it. And I believe that is the first place the market is now moving to. Then is there any fair value gap? This fair value gap has been used. And okay, there's another thing, what they called CRT. You see this candle, this big candle now, the market has swept the low. The market has swept the low from here. The market swept the low from there. So it is expected that the market will also go and sweep the what? High. I don't teach you new thing now. CRT is another concept on its own. I don't trade CRT like that, but I just use it for directional bias when I see it in higher time frame like this, one day, 1 week, and all that. So this is it. Now we're expecting that this market must actually what tap into this zone. So let's go to 1 hour and see that okay, the market is aiming to what, tap into this zone, and you will notice that there's another what, uh, point of interest here. There's another point of interest here, which is what, another block. There's another block at that zone. Wait, there's another block. Let me bring out my, this my rectangle is always like to go and hide. Now there's another block here. You can see it. So there's another block here. So this is the other block. Let me label it another block. Show you way. Cool. So now this is another block. So if USD start buying, like you have USD as a wife, but not that it control gold. Is a nagging wife, but gold is still stronger than USD, both in value. So is a high value what metal. So but we're expecting if USD keep on pushing up in this DXY, do you see how we keep on going back to that same DXY? If this market keep on buying, we'll be expecting this gold to retest inside this zone and tap into this mid pivoted other block. This is a kind of other block, a very powerful one. Did I say mid pivoted? I said inverted hammer. This is an inverted hammer. So this inverted hammer, it is always what, powerful when seen in the market. So I will not just take this trade like this. I must wait for confirmation. In gold, if you want to wait for confirmation in gold, kindly go to 5 minutes. Don't use even 15 minutes. Go to 5 minutes so that the structure will be very, very clear to you. Now, I'm looking to take a buy from here. If markets come down, I will take a buy from here upwards. If I want to target, I will just target here as the first TP. So, and here will be our protected low, which is 50 pips, 59 pips. This is 59 pips. Forget about this thing you're seeing 5,000 something. This is a 59 pips. So now you see it's 59.20 pips. Now targeting what, 100 and what, 56 what, pips. That should be close to 1:3 risk reward. But this should be our first TP. But there's nothing that is going to push this market down from here, if not this. So we probably target here. We now probably target here, which will now give you what, 1:4. 1:4 what, risk what, reward. I'm not going to take this trade like this, so I will still wait because I can't risk 50 pips. Yes, actually I can't. So I will still wait in 15 minutes. Sorry, in 5 minutes and 15 minutes. I will go and down in 15 minutes. Mostly I use 5 minutes to see a change of character. Once I see something like this, now I will now buy from here. I will now buy from here, setting my stop loss just below here. Now I will buy here. I will buy here, then targeting what? This what? Point. In that aspect, what I will be now having is a smaller loss side. A smaller loss side. Now I will have this thing, I will bring it up. Now I will bring it up. Now I'll be risking highest 18 what? Pips. Highest 18 pips, highest 20 pips. Let me make it 20 pips highest. What I be risking is about, is not what is not wait. Yes, 20 pips. Now I'll be risking 20 pips, targeting what? 22 what? Pips, which is actually what? 1:10 what? Risk what? Reward ratio. Did you see it? This is it all about. So if you have not actually subscribed to my channel, kindly subscribe, because I will keep on what giving you that knowledge that will make you what to grow in your what forex what trading what journey. And always turn your notification button so that you will not miss any of my what analysis, weekend analysis. Then you can also join my community in the what link in my what description. See you next what weekend.